You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Tuesday, September 18th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Tuesday. The first thing to know is Trump ups the ante on China and Beijing will retaliate. U.S. President Donald Trump said in a statement after Monday's market close that the U.S. is slapping 10% on tariffs on $200 billion worth of Chinese goods starting on September 24th, and warned that the tariffs could rise to 25% in January 2019. Trump added that if China takes retaliatory action against our farmers or other industries, we will immediately pursue Phase 3, which is tariffs on approximately $267 billion of additional imports. We have been very clear about the type of changes that need to be made, and we have given China every opportunity to treat us more fairly, he said in a statement. But so far, China has been unwilling to change its practices. China was quick to respond, saying on Tuesday that it has no choice but to retaliate against new U.S. trade tariffs, risking even stronger action from Trump and an escalation of the trade war between the world's largest economies. To protect its legitimate rights and interests and order in international free trade, China is left with no choice but to retaliate simultaneously. That is a quote from the Chinese Commerce Ministry from a brief statement without specifying what action it would take. Second thing to know today here is Apple and Fitbit are spared from U.S.-Sino trade dispute. Even as Trump put into motion the next round of tariffs on Chinese goods, the administration spared a category of high-tech products from the duties. A product code that covers Apple Inc.'s watch and AirPods, as well as similar smartwatches, fitness trackers, and other goods made by competitors, including Fitbit, was not on the American government's list. Apple sold 4.7 million smartwatches last year, and Fitbit sold 2.7 million according to research company International Data Corp. The third thing to know today is oil soars as Saudi Arabia is comfortable with $80 Brent. The U.S. prices soared Tuesday after Saudi Arabia was reported to be comfortable with Brent above $80 a barrel as the global market adjusts to the loss of Iranian supply from U.S. sanctions. Saudi officials were careful to avoid pinpointing a price target in their conversations, saying that while the kingdom has no desire to push prices higher than $80 a barrel, it may no longer be possible to avoid it. U.S. crude futures gained 1.44% to 69.67 by 5:57 a.m. Eastern Time, while Brent traded up 1.54% to $79.25 a barrel. Fourth thing to know today is U.S. global stocks shrug off 10% tariffs. Global stocks took Trump's announcement of 10% tariffs on China in stride on Tuesday, with most major indices registering gains. Some observers suggested that investors had prepared for a higher level of 25% that now will be put off until January, providing some months for officials to advance on negotiations. After an initial dip, Asian stocks closed the session with solid gains, while European shares followed their Asian peers upwards, nearing midday trade on Tuesday. The fifth thing to note today is North and South Korean leaders are scheduled to meet. South Korean President Moon Jae-in will head to Pyongyang on Tuesday in an attempt to salvage stalled nuclear talks between the U.S. and North Korea. As part of the 3-day trip, Moon and Kim Jong-un will hold a joint press conference on Wednesday. Kim has been avoiding a concrete timetable for ending his nuclear program, pushing for a peace declaration with the U.S. before he gets rid of North Korea's nuclear capability. Our second story today is from Investing.com. Cryptos fall and MasterCard explores B2B blockchain. Bitcoin slumped 1.94% to $6,323.50 on the Bitfinex exchange as of 8:39 a.m. Eastern. Cryptocurrencies overall were slightly lower, with the coin market cap of total market capitalization at $197 billion at the time of writing, compared to $201 billion on Monday. Ethereum, the second biggest alternative currency by market cap, fell 4.63% to $207.73. Global payments giant MasterCard has developed a blockchain-based system to bring high-volume business-to-business transactions up to date, according to a 3-patent application published by the U.S. Patent and Trademark Office. In the applications, MasterCard said that blockchain could be used by B2B teams to store data clearly in a format that is easily readable by participating parties. Our final story today is from CNBC.com. Gold falls as trade tensions keep the dollar afloat. Gold prices fell on Tuesday as the U.S. dollar steadied amid concerns of an escalation in global trade tensions after the United States imposed a new round of tariffs on Chinese imports. Spot gold fell 0.3% to $1,197.51 an ounce at 7:32 Greenwich Mean Time, after rising 0.6% in the previous session. U.S. gold futures were down 0.3% at $1,202.20 an ounce. Gold is facing a couple of headwinds. The impending rate hike by the Fed is weighing on, and obviously the escalation of trade conflict is pushing investors back into the U.S. dollar, ANZ analyst Daniel Hines said. And that, ladies and gentlemen, is news you can use for today, Tuesday, September 18th, 2018. Your Options News Rundown. I'm Dan Passarelli. Trade smart and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.